Obviously, we've been following our top story and its effect on the markets. You've got the standoff between the Trump administration and North Korea. How should investors, though, protect their portfolios? Obviously, global risk is on the minds of many. Let's bring in Mitch Roschelle. He's a partner at PwC and business development leader there. Good morning, Mitch.
Good morning, Cheryl.
So, obviously, global tensions are starting to affect sentiment in the markets, the overall feel about where the markets could go. Is this, do you think, a major issue for U.S. investors?
Not yet. I think we saw a little bit of sell-off yesterday. We saw gold going up. We saw flight to quality with a rotation into treasuries. But it's not that black swan event yet. However, when you talk to investors, the thing that there was caution against is a black swan event. And if we did have any kind of a military escalation with North Korea, it could really spook the markets, not just here, but abroad.
You know, it's interesting because, we're wrapping up earnings season here in the U.S., and that's really been powering the markets. You've had record close after record close for the Dow and even the S&P. At the same time, though, now we're hearing from these retailers, and from a real estate perspective, as you know, the brick-and-mortar companies have been a bit of a mess. Do you think that sector really is kind of on its swan song, if you will?
Yeah, I'm going to say it's a secular trend and not a cyclical one. And if you look at retailing over time, it tends to be cyclical and very tied to the economy. The economy is creeping back, albeit slowly, but we're still growing the economy, and retail's going in the opposite direction. So I'm going to call it as secular. And we're over retail. This is a little nugget for your audience. We have 7.3 square feet per capita in the United States of retail space, compared to 1.7 square feet per person in Japan and France. So we are over-retailed in terms of space and arguably under-demolished.
That obviously means that from an investment perspective, whether it's REITs, whether you like real estate investment trusts, or you're following some of the major names we're going to hear from, like your Macy's or Nordstrom's, that seems to me like a pretty big negative against these guys, Mitch.
Yeah, they have a lot of space. The real estate side of it isn't as bad because the real estate side has the flexibility to find alternative uses for that space. So if you look at the retail segment from a real estate perspective, they're turning a lot of those strip centers into urgent care facilities. There's other alternative uses. The retailers themselves, they're not going to be as nimble.
And real quick before I let you go, you've been following, and PwC has as well, you do these annual reports about consumer trends, in particular movement within college towns, urban areas. Are we still seeing that kind of consolidation into urban areas from like a population standpoint? Is that still happening, Mitch?
We are, but it's actually the smaller cities like Austin and Nashville. The big cities like New York, San Francisco have just gotten too expensive for everybody. So we are seeing that rotation into cities, but they're smaller cities, not big ones.
All right, Mitch Roschelle, PwC. It's good to see you, Mitch. Thank you for coming in.
Thanks, Cheryl.
All right.